Hello, everyone, and welcome to a brand new episode of the Indianaut Podcast, where we interview some of India's next best analytical and creative minds who are not only revolutionizing their own field, but at the same time transforming India's entrepreneurial ecosystem one step at a time. Our guest for the day is someone who has close to a decade's worth of experience in the financial technology sector of India. He has worked with various organizations such as American Express, EXL, Qbera, Razorpay, and now he is the co-founder of Rupifi, a company where he is building financial products for SMEs based out of India and Southeast Asia. He is an angel investor and an entrepreneur, but more than that, he is an Indianaut at heart. We have with us Anubhav Jain. Let us jump right into the conversation. Hi Anubhav, how are you?
Hey Gautam, doing good today?
Hope you're all settled in.
Yeah, absolutely.
Okay, that's great. That's great. So before we jump into the conversation, I just wanted to pick your brain about your experience through your MBA and your post MBA. I mean, there's a very interesting story over there. So I just want to revolve around that once.
Sure. So, honestly, I never had plans of doing MBA. And when it occurred to me that this was more a run of the mill kind thing when I was in engineering, I thought about MBA, and there were two schools of thought: whether you go and work for some years and then go for an MBA, or you directly jump into it. I actually always felt that to get into your first job, you should be better prepared. An MBA adds a lot of value. Plus, I think from the perspective of meeting a lot of people, building that network, I had studied in a college where the batch size was just 30 people. So I didn't
This
have
would be your engineering or your MBA?
the engineering
Batch size.
batch size was just 30 people. So that was a small batch, not a big network. Didn't get chance to interact with a lot of people. So I thought an MBA will definitely provide that. So that's how I landed up at Indian Institute of Management Indore. And I think that was a great journey because pre-MBA, all I had done was study. Post-MBAs was the interesting part because that was the time when I understood a lot of business aspects. It's very technical in India when you go for an engineering degree, but it becomes far more practical when you go to an MBA institution, especially some of the best institutions that are there in the country. So landing up at IIM Indore, I think, was a fortunate thing. Met a lot of people. In fact, my co-founder of my next two startups is someone I met there.
Right.
A strange meeting, obviously. Very fortunate to do that over a Maggie in the cafeteria in the college.
Right.
But that's how it all started. And he was the one who pushed me towards doing something of our own, because typically the mindset in India is you try to get a good well-paying job from an MBA college, especially if you are, let's say, in an IIT for engineering or in an IIM for MBA. But that was my objective when I landed there, but that was changed because what we realized is, and this was 2007, 2008, when there was virtually no startup in India. Right. Flipkart actually came after that. Right. So to start up or to think of entrepreneurship was not something that was heard of. But this friend of mine who I met there, he was quite instrumental in opening my eyes to there is another stream of things you can do. An MBA helps in acquiring the right skills and network for that. So I think my journey as an entrepreneur started from campus, which is my MBA college. And those people I met are still quite critical in what I've done in the past, even today what I'm doing. Right. So that's, I think, a very, very valuable part of my career. Also, you have a lot of fun out there. So I think I kind of enjoyed my time at the MBA college, which I had not done previously.
That's great. That's fantastic. So one of the very interesting things I was reading about you was when I was researching about you, to be more precise, was that I came across a lot of news articles which say how when you graduated out of your IIM Indore degree, you straight up went into entrepreneurship, and you left a very cushy, comfortable corporate role and instead chose entrepreneurship as a path and started a venture back in 2008. During the time of the 2008 financial crisis, in fact.
Yeah.
Right. So I just want to get into your mind, inside your mind regarding that? Like, what was the driving force behind that decision?
Sure.
Like, I understand that you were getting into the mind that, okay, maybe entrepreneurship is something I can consider, but what was the push towards it?
Sure. I think so. What happened is during the college days, we attended a lot of these business school events. So events at IIM Ahmedabad, events at FMS, events at TAPME, multiple cities we visited and attended a lot of business school events, which were all inter-college. And a lot of these were business plan competitions.
Right.
And both my friend and I, we kind of won one after the other a lot of these competitions, and we got into that groove of starting something.
Got it.
Initially it was just pocket money for us, right? You go to a competition, you aim for the first prize, you win 15,000-20,000 rupees, and you are very happy that, hey, this is good pocket money for me. But later on it actually evolved into something bigger, because you were constantly interacting with industry people. You were constantly interacting with people who were either investors or were donning that hat in some form, who were judging these competitions and then deciding among hundreds of entries that this is the team that has the most potential. So we actually believed that it's not just a paper plan, but it's actually something we can do.
Right.
And that's how this whole thing came about, that by the time it was almost end of our graduation from the college, we realized that we won like 7-8 competitions. Right. There's definitely merit to the idea we were sharing, because we were sharing the same idea at every competition.
Oh, okay.
So, and we were winning.
So we essentially you had a paper plan which you were running through all simulations in all colleges and giving it a trial run, right?
Correct. And it was more early validation. I mean, no customer or no revenue, but from a market standpoint, it was early validation. And we thought, why not launch it? And what is a better place to launch than just launch from campus? Makes sense. We launched our first startup on the day of graduation, midnight.
Right.
So that's how this whole thing happened. I'll say the jobs that we had, we kind of deferred our joining instead of rejecting those offers. Right. These were large MNCs. Right. One was American Express, one was Accenture. Right. So for both of us, these companies were far more understanding in terms of when we asked them to defer our joining. Right. So that was a fortunate thing for us. Right. And by that time, we had also...
Because I don't think a culture like that exists anymore, right? That you're able to so comfortably talk to the MNCs and tell them that, like, can we defer the educational thing?
Yeah, exactly. So it was just all different things falling into place. Right. Plus, I would say I had done a summer with my employer. So that obviously had the comfort of reaching out to my reporting manager, talking to him that, hey, we've worked together for 2 months, and that's why I have secured that offer. So can we do this a few months later?
Makes sense.
So I think that's what helped us start. Otherwise, it would have been tough, because you need to give your full 100% in the initial days to see whether this actually has any merit or not.
Right. And like I've previously mentioned, we fast forward from that point 12 years later, and here you are launching a new venture, Rupifi. So tell us about that. Like, share your experience with that.
Sure. So Rupifi is my 4th startup, and I think I've learned a lot since those days. The good part about doing a startup after 12 years again is that you carry a lot of baggage from the past, but you know what part of that is useful and what is something that you can just completely throw away. Right. So all of us have our own baggages, right? We all carry our experiences, some good, some bad.
That's true.
The good thing about starting for, let's say, the 2nd time or the 3rd time, or in my case, the 4th time, is that you know what things you should not be doing. And I think one thing that I have learned is you definitely learn what you should not be doing much faster than what you should be doing. Nobody tells you what you should not be doing. Everybody tells you do this, do that. But I think the most important learning as a founder is things that have not worked for you. Right. Because there will always be things that don't work for you. Right. So I think those are critical, that that at least I have taken a leaf out of my journey in terms of what not to do at
Right.
Rupifi, and I think that has helped. It could be smallest things in terms of how to go about reaching out to investors. So it's not that how to reach out, it's more about how not to reach out.
Right.
Like whether to send somebody a cold email or not. So the knots are the ones that I think we've kind of learned.
We really grasp
better.
the knots.
Yeah.
Right. So, a very interesting tidbit is that in all of my conversations with Indianauts, right, such as yourself, this one factor has come out a lot. Like that you focus on the failures and you learn from the failures. And I think you have a lot of accomplishments in your name, right, under your belt, from your past experiences. But I think it'll be the failures which you'll always remember and keep in mind and keep in your heart, because
Yes.
they're the ones which help you grow, right?
I think people learn from their failures a lot. And while a lot of people would like to celebrate failures, I kind of disagree with that. You should celebrate successes, but successes have a failure somewhere at the back, right? Which we should not discount. So I'll say I had a venture in the education space, which taught us a lot in terms of what went wrong. We spent 3 years of our career building that venture. It did not do that well as compared to the most recent fintech company that I had. But I think those are things that really shape you for the future. So from failures, you always get to know in terms of who are the people you should be working with, what are the hiring mistakes you did, what are the operational challenges you faced, which you should not be doing those mistakes again. What are the fundraising challenges you faced, which you should not be taking in future again? What are the things in terms of market validation and jumping into a startup, which you did, which were probably proven wrong after being there for 12 months. So those are things you should not do. Like in StudyBud, for example, in the education startup that I just talked about, we realized after 12 months that the B2B model does not work. Right? That was pretty late. Now there are two ways to go about it. Either you've invested a lot of time, you kind of try to justify your decisions, which is the biggest mistake I think people make. And we spent another year trying to justify the 12 months of investment that we had done. I think that's a big recipe for failure. When you try to get into that spiral of justifying your own decisions. So it's better you fail fast, as people say, and then learn and move ahead rather than wait for a failure and trying to learn from it. I think it's far better to just move on and not get invested in your venture from an ego standpoint.
Got it. So you just talked about two paths, right? So the first would be to just try to justify your decisions and try to justify your perhaps at that time a right decision, but in a future perspective, in a long-term perspective, not a right decision, right? The other path which I believe you would be leaning on towards would be adapting, right? Would be adjusting to market conditions. So is that something you've also experienced in your past startups, that what you had originally envisioned and the end product were quite different after you received customer feedback or you received feedback from various other stakeholders of the source, like investors and whatnot? So has adaptation been a part of your journey as well?
Of course, I think adaptation, change of business model, validation, and then moving on, or even pivoting to an entirely different business model are all part of the journey. In fact, we had one startup where we pivoted thrice. Right? I would not say that we finally succeeded, but I think all those pivots were more either market driven or customer driven. Right? Because as a founder, you would always rely on these two, right? Have you understood the market well, or have you understood your customer well? So, going back to our cab conversation a few minutes back, that's exactly what one needs to do. Understand whether the customer really wants it. And if you make that mistake of not understanding what the customer wants, you'll eventually have to adapt. because your customer will eventually go and come and tell you that, hey, I don't want this, I want something else. So either you stick to your plan and try to prove there is a need, or you listen to the customer and adapt to their need.
Right. So we've talked about successes and failures, but I want to focus on a very recent success of yours. That was that Rupifi got selected for Y Combinator's Winter 2020 batch. So we expect a lot of our viewers to be aspiring Indianauts and aspiring entrepreneurs. And I just want you to walk us through that entire journey from the application to the interview, because this is gold information, which I really
Sure.
feel should be out.
It's like IIT, for example. Somebody who's cleared the IIT exam, you would not say that that guy is successful,
Right.
or this is a success of his
I
career.
mean, I don't know. A lot of people
Right.
consider that success.
People do that. People do that. And this is probably, again, a question of how people perceive. But I think somebody who's cracked that exam and went on, there are all sorts of people out there who get into IITs and make a rewarding career versus those who have a pretty standard, normal career path, which is somewhere in the oblivion and you never even know about them. So all these sorts of programs and milestones are important, but success is still far for all of us. But since you talked about Y Combinator, I think it's a very important milestone for us as well. It was a big validation for us. So when we had started thinking about Rupifi, so the journey is very interesting. We had been brainstorming on it for close to 1.5 years.
Oh, wow.
So late 2018 is when the three founders, the three of us came together, started thinking about it, started thinking about what market we want to go after, what customer we wanted to go after, started talking to some of these customers and markets, went to the whiteboard, created a plan, completely rubbished it, went back to that whiteboard after a few months, applied to Y Combinator in March 2019, got an interview call but got rejected. So I
Okay.
think that's something, when we spoke about failures,
Right.
I think people don't know that we've gone into Y Combinator. And to give you my story, I have been rejected by Y Combinator 5 times.
Oh, okay.
This was the 6th time, lucky for us,
Oh,
for me
wow.
at least, personally.
That's great.
So I applied with StudyBud twice, never got an interview call.
Okay.
With Qbera twice, never got an interview call. But then with Rupifi, we had applied. That was the first time we got an interview call.
Right.
And I think what I had learned through those 4 application failures was, what do they want? What does a premier program like Y Combinator look for in an application? This time, I think I had done far more research than the previous 4 attempts. So our application was far more to the point, crisp, and focusing on an actual problem we were trying to solve. So we got an interview call, but obviously we were not better prepared for the interview because it was ultimately just an idea. We probably had not done enough research, and that's why it was a fair decision when we got rejected in the interview. But what that led to is a series of questions that the interview panel made us to think. Right? It was a 10-minute interview with probably 20 questions in those 10 minutes. But those 20 questions is what we focused on in the next 6 months.
Okay.
Right? So again, applied in September.
Okay.
Very similar application, just few answers that we changed based on what we had researched after those questions came to us.
Right.
Got the interview call again, and this time focused on answering those. Fortunately for us, it was exactly the same interview panel.
Oh, okay.
So they remembered us. They remembered where we were lacking in the first instance. We had all those answers this time.
That's fate.
Yeah. And so, I mean, you need that probably. I'll not say that that was one big reason for our selection, but it was important because...
But at the same time, it brings the story to a full circle, right? You started
Exactly.
where you failed, you exactly reached that part again and you succeeded over there.
Exactly. So it was not too much of a surprise for us when we got that selection call, because it's the same people who had asked you a question and you probably didn't have an answer. This time you came to them with an answer.
Right.
So I'll say, if anybody wants to talk about what goes behind cracking Y Combinator, I think they are looking for certain answers, which they ask in an application, those questions. And they very clearly say that the answers which we are still not got from that application is what we look for in the interview. And the moment they get those answers, I think the rest is getting into the batch. It's a separate story that we didn't actually go to the Y Combinator batch. But I think selection was a validation for us.
Got it.
So to go back to that point, when we got that selection, it kind of reconfirmed our faith that we've spent a year brainstorming on our idea. The Y Combinator selection is a good validation.
Right.
Again, just a signal. You should not read too much into Y Combinator being your, the recipe for success. Right. It doesn't guarantee anything. Right? Like going into IIT is not a signal that this person is a brilliant guy or he'll make a great career in the future.
Right.
The same way, I'll say it was just a signal for us, but a good signal for us to push ourselves.
A good start.
Exactly.
So just to summarize, the strategy towards filling up a Y Combinator application and the strategy towards facing in the interview should be revolving around being crisp, clear, knowing your market, and then exactly fitting just explaining your product fit the best way possible. Am I right? Or is there something else you would want to add to
Exactly. It's a very simple application. They just want to know what you want to do, how are you going to do it, and are you the right person to do it? So they have two parts to the application. One is the founder profile and one is the business profile. I think that's essentially what you need to focus on. And yes, just answer what's been asked. I think a lot of times people fail to understand the question and they are kind of try to answer much more than what's being asked. I would say just answer what they've asked and leave some room for them to come back. Right? Because that's what you want. They should interview you. They should call you because you've left that space for further questions without really leaving a room for confusion.
Got it. So just to like leave a fruit hanging, but
exactly
not too high, not too low, just the perfect.
Yeah. If it's too high, then they'll probably not reach out for it. But it should be low enough for them to call you and
should interest them,
reach out for them. Yeah.
Makes sense. Okay, so let's further delve into your specialization, that is the FinTech industry. And let's just talk about the FinTech industry now, to be more precise.
Sure. So I think Indian FinTech has evolved, though it's still moving at a much slower pace compared to China or the US. But that's by design. So Indian financial ecosystem is something that we need to understand better if we have to really talk about what trends we are probably going to see in Indian FinTech. So Indian financial ecosystem is very business driven. Right. So today in India, small businesses contribute 45% of the GDP. They employ 35% of the Indian population. So whatever happens is going to be very small business driven. Right? And that's why Rupifi focuses on small businesses, because we understand that this is a large segment to go after. Indian FinTech is a very heavily regulated space right now, because India, right from the liberalization times of 1990s, has focused a lot on regulation.
Right.
So compared to China, where regulation kicked in much later and then had a strong impact and immediate impact on the space, Indian regulation or regulatory system has been there right from the beginning and has had slow but impactful decisions taken at every point of time. Right? It's like you let a space reach from 0 to 100 and then a regulation comes in and it drops from 100 to 50. The Indian FinTech space has actually grown from 0 to 5 with the regulation coming. And 5 has not become 2, but it has just become 4.5.
Okay.
But that has also led to that 4.5 becoming 20.
Okay.
And then another regulation comes in,
right,
which is more like a correction.
Right.
So it's like that market correction that has happened.
I'm interrupting you, but also one more thing. So do you think that these regulations are also not progressing the Indian FinTech space from like say 0 to 50 or 0 to 100, but instead making it go like 0 to 5, 0 to 20? Is it
In
like
smaller steps.
in smaller steps? Is that also due to regulation? Because a very specific case of regulation comes to my mind when I think about this. Specifically in this decade itself, I believe the regulations which came from RBI in the NBFC P2P sector, for example, that was something that was not expected and it was
Yeah.
quite unique, right?
Yeah.
And I think that would be a perfect example of going to 0 to 5 and then going from 0.0 to 5 to 5 to
Yeah.
4.5, right?
Yes. So Gautam, I think NBFC P2P is actually a classic example, or rather more peculiar example. I would not generalize what happened on the P2P side when I speak about regulation. I think we'll come to that separately.
Makes sense.
But all other spaces, what I would say, since you mentioned Niti Aayog, for example, there is an iSpirit organization. Nandan Nilekani led a lot of initiatives for India. So I think India has given the global financial ecosystem a lot of things that they can learn from. The entire Aadhaar stack that has been built is an example for the world. UPI is an innovation, an example for the world to copy and to use, right? And this has been possible because the required regulatory measures were in place. So I would say Indian regulation, or regulator rather, has been very watchful of what has worked and not worked. They have been progressive with respect to things that have worked outside, and they have been a bit conservative when it comes to things that have not worked outside. P2P is the example of the latter, where they have seen P2P as an industry evolve, the downsides of P2P exploding suddenly. And that's where RBI from day one has been very, very conservative about how they want to see the NBFC P2P space in India. But I would still say the entire regulation of P2P companies having their separate NBFC license, like an NBFC P2P, is a very, very advanced sort of regulation when you talk about it.
Right.
It's a separate construct that they have formed. That means they've spent a lot of time in a space which is completely technology driven, right? You don't expect RBI or a regulator, especially a financial regulator in a country like India, to be so progressive when it comes to a small section. Because today P2P, in terms of overall volumes, whether it's lending, is a fraction, right? Even after those regulations. So if the question is it because of that regulation? Probably yes, to some extent. But I think that 0 to 5 being slow is only going to help the 5 to 50 becoming a bit faster.
Becoming a bit more organized.
More organized, much more stable.
Got it.
To market pressures.
Right. So the next aspect of the Indian fintech sector which I want to focus on would be the simple case of supply and demand, right? Like a lot of the trends in the current Indian fintech system depend on digitization and the move towards cashlessness in India, right? But as we can see, there are many suppliers or companies in the fintech space increasing, right? We are seeing various lenders coming into the picture. We are seeing various insurance companies coming into the picture, various unique solutions. Do you feel that at the same time, the demand side for that space, like your consumers, your SMEs, your general folk, people, are they also aggressively increasing at the same time? I mean, is the supply meeting the demand, or is it something? And I mean, I also want to focus on how, say, you look at companies such as Flipkart or Ola, they are also now coming into the financial services sector as well, right? Ola has released a credit solution. Flipkart is releasing a credit solution. I mean, that's what the news says. So we see a lot of supply side players coming into the picture. So do you see that the demand side is meeting that, or is there oversaturation, or is the Indian heartland still largely untapped?
Sure. I think there are multiple questions that I can hear, Gautam, here. So first is there enough demand, right? Are we seeing that the space has become crowded with too much supply? I think the way supply demand works is there is always an imbalance and the other side tries to then reach a balance, uh, the equilibrium is established, but then it again, because of one side growing, it again reaches a stage where if the demand was higher, now suddenly the supply becomes higher, and then the demand tries to adjust, or you create demand, whether artificial or actual. So take the e-commerce example for sake of this discussion. There was a demand that existed, which companies like Flipkart and Amazon understood. They came into the market, captured a part of the market, which was tier one towns, primarily the metros, the people who were using mobile phones, who were using internet, and they were able to tap into that market. Then there was a time when you had a lot of e-commerce companies suddenly, right? Some of those names we would not even remember today.
I agree.
Right? There were tons of e-commerce companies out there, all trying to give discounts. You could compare prices, and you could even get 10 sites giving the same product for between 150 to 100 rupees, and you can actually go and buy from the cheapest option available to you. Obviously, that was not very much sustainable, so there was a correction, right? Only the strongest players survived.
Right.
Then, with growing sustainability and them being in the industry for long, they understood the customer. Then there was another demand created, which was in the tier 2, tier 3 towns.
Right.
And then there was again a growth that happened of these players after consolidation, or after some of the players who did not survive, them shutting down.
Right.
So I think that's how pretty much it is happening on the fintech side also. There was a time when lending was broken. Companies and startups realized, or people realized, that there is a need for digital lending. There is a need for companies on the consumer and the business lending side. Companies came in. Then there was a bit of a crowd because capital infusion was happening. A lot of companies were trying to solve the same problem. Cost of acquisition went up because now there were 20 companies fighting for the same customer.
Right.
Because initially, when you see, business models focus on a segment of the total customer base.
Right.
So they were all focusing on the same metro customer initially. He's easier to reach out.
Right.
He's far more educated, easier to crack. Over time, there was consolidation. Some of these companies could not survive. They could not either raise money or could not afford that high cost of acquisition. And they kind of vanished from the space. And now most of the companies that have survived are focusing on the next set of customers, right? So they're creating, they're creating that demand.
Right.
They're creating channels to improve their cost of acquisition. So that's essentially how all these sectors behave, whether it's commerce, whether it's travel. And we have numerous case studies that we can create. How there was a time when every third startup was a travel startup, right? Which we don't remember today. How there was a time when every third company was an e-commerce company. Today, we see a lot of FinTech happening. So it's a cycle, like the .com cycle that happened. There was a huge burst of technology companies. Today, it's FinTech in the overall startup space. Because there is a need in an economic like India. You first go towards consumerism. And then to power that consumerism, you have to give credit. Right. So that's what people did. First, the Flipkarts came and they made people buy. Now they want people to continue buying, so you'll have to give them credit. Right. Similarly, the Olas came, they made people ride. Now to ensure that people ride without friction, you give them credit.
Right.
So product follows another. Right. It's a journey for most of these, for most companies, not just them. I mean, at Rupifi also we will evolve. We'll offer a product, understand our customer, create a demand, try to solve it. And once we have supply, enough on the supply side, we'll probably try and create demand for maybe not the same product, but another product.
Got it.
Right? And that's how I see this whole demand supply equation balancing out. It's tough to say whether there is oversupply right now. I'll say there could be a situation where it's not oversupply, but the same supply or that supply pool is catering to a very limited pool of demand.
Right.
There is another demand that exists, but purely because of operational and ease of reaching out reasons.
Right.
All suppliers are going after the same demand, small pool of demand.
Got it.
Instead of looking at hey, there is another set of demand that exists. Why don't you people reach out there? So I think that's how supply and demand works.
Right. And a good practice which I myself am currently pursuing, which I recommend our viewers would also do, is that whenever you use an app, for example, if you're using Amazon or you're using Flipkart or you're using Ola or you're using Uber, like any duopoly, if you're using Swiggy or Zomato, just try to think of why you're using this specific app. Like what is driving you to this app itself. So I was actually frankly quite surprised with a lot of my buying decisions, right? That I am now fixed in a lot of ways when it comes to certain apps. I have a very fixed cab hailing app. I have a very fixed e-commerce app. I have a very fixed food delivery app, and I just try to think of what are the reasons I'm going with this app.
Yeah.
And that's a good practice if you want to get interested if you want to like learn about consumer experience and learn about user experience.
Yeah. And at the same time, what I'll also mention is the moment there is a gap in experience, people switch.
True.
People become, or people's readiness to try goes up.
Right. But I'll also like to include one more thing, that if you're able to like build a really strong relationship with your consumer, even if you're giving them that slight inconvenience at a certain stage due to some problem or due to some unforeseeable reason,
Of course.
the consumer still sticks.
Of course. So a small dip is fine.
Right.
But so the day a company starts ignoring customer experience and it becomes a norm where customer experience takes a backseat, I think that's where you start losing those customers.
True. Absolutely.
It has happened to me where I have switched to a brand which I had never used. And I always thought that the brand I am using is the one I'll always stick with. And I have switched completely now. I can't think of going back because of a series of events where I had a poor experience.
I understand.
Right? Because that inertia to change is high.
Right.
When you become loyal to a brand.
Right.
It could be a consumer brand. It could be anything. Right? That inertia to change is high. But it's not infinite.
Right.
So an experience is the fastest way for a company to breach that inertia.
Absolutely.
Right. So, and that's why at Rupifi, if people ask us what is your defensibility, of course, technology and pricing we talk about, but I think we focus a lot on experience. That's my biggest learning from Qbera, where I saw that people are ready to pay you 1.5 times, even 1.5 times of what they can get a loan at from a bank.
Right.
Purely because you are giving it in 24 hours with minimum documentation.
Absolutely.
And
I mean,
that's amazing.
This actually happened with me, right? I took an 18% interest loan compared to a 14% which traditional bank was saving me, just to save 1 month of the entire process.
Yes, and people do take. So while there are schools of thought that why do people buy iPhones on EMI or why do you buy a small consumer durable on EMI? It's convenience.
Right. So you've talked about experience a lot and you've talked about team building a lot, right? So I just want to focus on this now, like how to build the right team for any product on various stages, right? If you look at it from a life cycle, if you look at the entire life cycle of a product from engineering to experience design to data science, I just want to understand how do you go about building the right team? And I know this I'm asking you this question specifically is because I've seen you write a lot on this topic on Medium and other public forums such as LinkedIn, etc. So I just want to get your views on this topic.
Again, this is something you learn over time. So this is more an experience and there is no right or wrong way. As an entrepreneur or as a founder, as an
Indianaut,
as an Indianaut especially, one thing that I've learned is when you're building a team, especially in a 0 to 1 stage, it's actually different how you go and hire for a 0 to 1 versus a 1 to 10. The same things don't apply.
Right.
So for a 0 to 1, I think things that I follow is when you hire somebody, the comfort you get on onboarding that person comes significantly from the fact that does it come from a closed group of network or not. So to take an example, at Rupifi, we are right now a 6-member team.
Right.
The first 3 members that have come on board are all people that the 3 founders have worked with in the past.
Got it.
Right? It was just pick up the phone, call the guy, tell him that I'm starting again. Do you want to join? And in 90% cases, when you pick up the phone and call, you know that the answer will be yes. Right? You are not actually checking with him. You are just ensuring that he comes on board.
Right.
And that helps, right? Because you know this person is coming not because of a vision of a company or because he wants to make money. It's because they want to work with you.
Right.
And that's the fastest and the best way to build a team.
Right.
Because even if you change the business model tomorrow after 6 months, this is not a person who will say, hey, I didn't sign up for this. Because he signed up to work with you rather than a business idea or a business model. I think that works very well for me to get people from your network who you have worked with. It's not always easy to do that, especially if somebody's starting young, somebody who's not been in the industry for long. So it's always challenging to do that. So for the very next thing I'll say is look at people who have something that makes them uncomfortable.
Right.
You need to find that thing which makes them uncomfortable. Because if you have people in their comfort zone coming in, it's a tough sell.
Right.
Because especially initial days, 0 to 1, people push harder. You want people to push harder. And that happens when there's something that's not in their comfort zone. It could be financially something that's kind of making them uncomfortable. It could be role-wise, the kind of stress or the kind of the amount of work you need to do, which is making them uncomfortable. And uncomfortable is not stress here. Uncomfortable is a challenge. It's a challenge that they've decided to take in their lives. Right. So we're not making somebody's life difficult, right? That's not the idea. The idea is to put a challenge in front of someone, right? And pull them out of a comfort zone because of that challenge. And now make sure that they deliver to that challenge. And once they do that, before they come back into their comfort zone, you give them another challenge.
Got it.
That's essentially how I go about looking at people and make sure that it has to be a challenge for them.
Right.
So maybe something they might not have done exactly that in the past, so that there is a need for them to push. Maybe somebody from a completely different industry.
Right.
You know, they have the right skills, but maybe they've not worked in FinTech before. They've done similar job outside FinTech. So like in engineering, you can get a designer who's never designed financial products.
Got it.
But you know he's great in designing.
Right.
That's actually putting someone out of their comfort zone, right?
So,
similarly, a product guy who's worked on consumer brand but never worked on a financial product.
Right.
Get him there. And I'm not saying that you need to do that. I mean, of course, there is a preference to have someone who's worked because that's a plus point.
Right.
But you need to find that one thing which is not in their comfort zone.
Speaking of teaching, besides your duties as an Indianaut, you're also a friendly neighborhood visiting faculty at various business schools, such as a few IIMs, right? So is this a hobby or have you always been inclined towards teaching?
I would say I've always been inclined towards sharing experiences.
Right.
I think people learn more from others' experiences than anything else, right? So I went to the college with the thought that I'll probably coming here for my last edition of this course. I've been teaching that, or rather facilitating that for last 4 years.
Right.
But the kick I got again with that interaction, I kind of gave it a second thought that maybe I'll come back next year. So it's tough actually to say what's driving it. It's more going back to your college. So I definitely find it hard to say no to them when they call me for a session. And B, it's more interaction, sharing your experiences, because you also tend to learn. Because when I share an experience and somebody has a counter, I actually realize that, hey, baby, I've not looked at it that way. I'm trying to tell you a story. and I'm trying to tell you that, hey, this is a story, this is the conclusion. But somebody tells you that, hey, no, that's just part of the conclusion. You've missed another point.
Correct.
Which is, I think, the driving force behind why I do that.
Right. Well, I certainly do hope that your interactions with students and your interactions at various B schools don't end anytime soon. I think this entire podcast, this entire interview has just given a preview of what kind of lucky interactions those students must be having with you, right?
I'm sure they're not that lucky.
No, I definitely consider them lucky, right? Because you have a lot of valuable insights, because you work in so many different spheres and you've primarily specialized in one sector to the best, right? You've been a specialist and then slowly you've developed into a very big generalist, right? In the entire sector, which is amazing.
Yeah, that I agree. I mean, it's not a carefully thought career path, but I actually enjoy being only a risk person or a very, very focused on a certain specific field in my first 6 years of my career, and the last 6 have been more about learning new things. So I think, and that's the good part.
Right. Thank you so much for joining us today.
Thank you so much, Gautam.
We wish you the very best of luck for Rupifi's future.
Good luck to you. Good luck to Indianauts as well.
Thank you. Thank you so much, everyone, for joining us for this episode. The Indianaut Podcast is available on YouTube, Apple Music, Spotify, and Google Podcasts. Be sure to follow us on Instagram and Facebook to receive all updates on the upcoming episodes. Thank you once again.